Hello and welcome to CMS Forex News. I'm your market analyst, Nick Nassad. Today is Wednesday, January 21st, 2009. We begin in the UK, where the economy shed 77.9 thousand jobs in December, a number that came in lower than expectations, but is still the second highest amount since 1991. The total people now claiming jobless benefits rose to 1.16 million, the highest level since 2000. The pace of firings has picked up as the labor market continued to deteriorate to end the fourth quarter. The ails that have bogged down the UK financial sector as a result of the credit crunch has spread to services and manufacturing, impacting the real economy in a very tangible way. In its meeting minutes, the Bank of England decided 8-1 to cut rates by 50 basis points in its January meeting. One member, David Blanchflower, voted for a 100 basis point cut, as he has been at the forefront for calling for more aggressive actions in the face of the deepening recession. The other members, however, judged such a big move would have unsettled financial markets and could have damaged confidence in the economy. The UK government borrowed £14.9 billion in December, and the public sector net cash requirement hit a record high of £44.2 billion. The government is feeling the strain from lower tax receipts as the global recession limited economic activity. At the same time, the government has had to spend money recapitalizing banks such as the Royal Bank of Scotland. The pound continued its descent today against its rivals, falling to the 1.3620 level in New York trading against the Greenback. The swing from high to low today amounted to 330 pips, but that was still a less volatile fall than what we have seen the previous two sessions. In late afternoon trading, the pound managed to pare some of its earlier losses. Today's low was the weakest the pound has been against the dollar since 1985. The euro-pound pair, which we haven't looked at this week, continued its move upward. Following sideways action between January 8th and the 18th, the pair has embarked on a new uptrend. From its low near 0.89 last Friday, the pair has rallied 500 pips to set a new high near 0.9430. In Germany, producer prices declined 1% in December, following a 1.5% decline in November as lower oil prices helped cut production costs. That figure was close to expectations and continues to show a trend of disinflation in the largest economy in the Eurozone. On the year, prices eased to 4.3%, a marked reduction from the level seen in late summer. Yen cross pairs saw a very sharp spike today around 10 a.m., which was related to an option expiry that took place around that time. The dollar-yen pair plunged almost 300 pips around that time, hitting support at 87.10, and then rebounded throughout the afternoon. Following a sharp decline in U.S. equities yesterday, stocks today made up a good amount of their earlier losses, helping strengthen the greenback in New York late trading. With stocks climbing in the U.S., the Euro-Swiss franc pair saw a strong 290 pip rally to the 1.5045 level. That was the highest the pair has been since January 12th, and now runs up against resistance from that week. Coming up tonight, New Zealand will post its manufacturing PMI, and Japan releases its trade balance. Overnight, Switzerland releases its ZEW expectations, the Eurozone posts data on industrial new orders, and the UK reveals a measure of manufacturers' expected orders. Tomorrow, Canada will release data on retail sales and its leading index. The US will post building permits, housing starts, jobless claims, and a government measure of housing prices. And that wraps up our show for today. Thank you for joining us here at CMSFX.com, and happy trading.